Okay, I count like 3 people in the audience right now, which is great because we can be honest and talk about things we really want to discuss rather than please the audience, right? So you're welcome to give comments and questions while we talk. This is a session that we wanted to talk about $26 trillion worth of money potentially that's been deployed into impact investments. So we're all coming from different spectrum of the impact investment world. So we have Anders from Nordic who actually has been looking at impact investment from a pretty, I suppose, pragmatic angle. And then we have Paul, who has been coming from the policy end into the more venture-based end, and he's been incubating a lot of very interesting projects in London. And Maureen is going to sing for us.
No.
No. Maureen's actually from Vesl. So she started Vesl. Oh my God, I scared her. This is great. So Maureen started a venture called Vesl to actually facilitate trade credit insurance for a lot of the developing markets and SMEs, right? So because unfortunately, commodities trading and a lot of basic trade flows are not able to be offered to regional market participants because of lack of counterparty risk management. So this sounds really dry, but it's absolutely necessary. So she's doing something about it. And then I'm called in because I use most of these kind of services in what I do, right? So I facilitate essentially commodities trades between global trade channels and actually control the risk of a lot of those trade flows by insurance and also by working with the right kind of investors. So without much ado, shall we? Maureen, you want to sing?
Are you familiar with some nights? Some nights
Yeah, let's go.
I stay up cashing in my bad luck. Some nights I call it a draw. Some nights I wish that my lips could build a castle. Some nights I wish they just fall off. But I still wake up.
Oh, yeah.
I still see your ghost. Oh Lord, I'm still not sure what I stand for. What do you stand for? What do we all stand for?
Yeah.
Some nights, I don't know. But impact investors do. So that's all. That's in for the introduction for this. Okay, that's me singing. I'm sorry. All right.
Cool.
Thank
Nice. Alrighty. All right, let's get the hard questions started, shall we? Right. So we've seen that impact investment has grown to become a $1 trillion business, right? And it's not just endowment funds and people that wanted to feel good and avoid certain investments. It's all about folks running towards the same goal together, which are defined by the UN 17 Sustainable Development Goals, I suppose, SDGs, right? So the first question I wanted to have everybody talk about here is, shouldn't all investment mandate be impact driven?
Shall I go first? So I think we are seeing a huge shift of capital going on. We shouldn't underestimate it. And I think actually in some ways the tech industry is a little bit late to this. So we've seen lots of other asset classes where people have created funds and opportunities for people to invest in line with their values. Whereas actually in the tech sector, we're quite late to this. And now we're starting to see new funds and lots of startups coming along that are aiming to have a positive intentional impact, and that's great. So you've got this dual trend of the money is more interested in impact. I think the founders are more interested in impact, and now we're just starting to see really good opportunities for impact-driven, mission-led startups that could have an impact on millions and millions of people.
Yeah, I would like to build on that. I agree with Paul, and I think the answer is a clear yes. It should all the capital in the world should be driven in the direction of doing good business. I'm a corporate dropout. I used to be in the corporate world for 25 years, but I didn't really want to spend any more time on not doing good. And I mean, what's the point of being very rich while the planet is dying? I mean, we need to have a green planet. We need to have good winters, good summers, 4 seasons. And I mean, what will our children inherit from us if we are super rich and there is no planet to stay on? I mean, it makes full sense that, of course, impact investing is the way to go for deploying your capital. But I don't think we should talk about impact investing. I mean, we're so totally lost on the definitions. There's so many people ask me, why do you talk about impact investing, this and that, all the different definitions? It's not important. What is important is that you do something really good, and that there's a strong correlation between solving some of the biggest challenges in the world and making a lot of money. And that's what I believe. There's no trade-off in impact investing on financial return, and that's important to tell the investors.
So a little bit of stat before I let Maureen jump in this case, right, is that true to what you said, the latest report from the Global Impact Investment Network actually indicated, impact portfolios outperformed regular portfolios by 15%, right? And the expectation of further improvement of returns is 84% of all survey members. And the point about why is it that a lot of the money being made, by investors sometimes are not impact driven. Sometimes they're very short date focused, right? Maureen has some personal experience on that.
Yes, I agree. I mean, even it's not just impact investing. Even from the point of view of founders, entrepreneurs, we're all about going for impact as well. We make sure that our products, that whatever we're building is all for the better good of humanity. And even our accelerators, from my experience, I was in startup bootcamp this time last year. And if I'm not wrong, if not all of the startups that are part of the accelerator are all for impact. I mean, there's something to do with not just making money, but also what goes beyond making money.
Such as, managing genuine and material investment risks, right? Such
Correct.
as what you do with insurance and also what you do with proper due diligence of projects and proper support,
Yeah,
right?
that's right. For trade credit insurance, for example, it helps with trade financing, and an increase in trade financing increases the number of jobs, the number of production, and the number of partnerships that a company can have. So there's a ripple effect.
Yeah. So I figured that we've just answered the question, is there any other aspect other than impact that we find crucial? So, we need to be material, reduction of risk, and measurable, and also impacting on the bottom line, right? So would you like to add to this point?
Yeah, maybe I could just add to what Maureen is talking about. I think that, of course, the impact side and the measurement is important. And you're talking about the GIN report?
Yes, the
But
GIN report.
if you look at different statistics, and there are so many proof points nowadays, and if you, first of all, have a very diverse management team at the top, it's 15% more likely that you outbeat the market return, average market return. But if you have a full gender diversity team, then it's 35% more likely that you actually could outbeat the market return.
That's
So
right.
of course that just makes good sense because you make more money. But you're not when we invest to this question too. I mean, of course, early stage we invest in founders. And founders are the key. So people like Maureen, we would love to invest in because they have the stamina, the drive, the energy, and they have the impact perspective. But if you don't really identify that the intentions are there, we will not invest. So intentionality is a key for us when we invest in impact investing. And of course, Maureen, you will pivot your business, you will change your strategy to survive and grow. And that's why the intentionality of the founders is a key.
Okay. So beyond intentionality, I wanted to talk about our topic, which is brace for impact. Brace, some of us have worn braces for our teeth. It's a horrible experience because it supports the teeth but also constrains it. So what kind of support and constraints, do you see that is coming up in the whole industry of impact investments? How have we contributed to the support and also the constraints?
Well, I think it's the impact investment world, particularly in tech, is still very new. As I was saying, it's slightly late. And actually, in Europe anyway, there's all kinds of places where startups can sort of fall off the funding kind of path, and getting access to support is still very hard because it's not yet as mature as the straightforward startup investing ecosystem. So I think it's really important to develop all the kind of solutions as investors and as supporters of this to try and fill those gaps. So as it's just as just as easy, if you like, to start an impact startup as it is to create a non-impact startup.
So am I hearing that you're saying investors need to do some work? Finally? Wow.
We're always working hard. Yeah, no, I think it is. I think it should be on the investors to do that, to be honest, because it's up to us to create the ecosystem and to help build that ecosystem to really make the investment sing, if you like.
Yeah, I also wanted to tie my answer to the questions, and from William, it's not like all investment mandates today are impact driven, not at all. I think it's absolutely too little. Thank you for the phone there. So of course it's not so. We need to make all impact investments or mandates to be impact driven, of course, but we are not there yet. And I believe that impact investing will become mainstream. And when you see BlackRock is sending out the message to all the portfolio companies, if you don't go impact, you cannot expect our support. So there are big changing forces now, and I think that we will see that this is a trend now, and in Silicon Valley it's really it's a buzz. But globally, if you see the total amount of capital deployed in impact investing, it's absolutely too little. So we need to change this. In 3 to 5 years, impact investing it will be mainstream, and then we could just talk about investing, and then all investment will be good investment, I believe.
Okay. I wanted to address that statement about if all investments are driven by XYZ mandate, does that mean none of the mandates are being met? I don't think so, because investment means taking on risk of loss. And usually VC stage equity investment means equity of total loss, if not more, right? So if taking on a lot of high risk from investors, is guided by better risk management, that should be something that makes sense for everybody, right? And if folks wanted to invest the money without understanding, by the way, that's a kind of, saying, I don't really find the word invest to actually really apply here when people don't assess the risk and also don't hedge their risk. That's not investing, that's donating to the gambling industry, which has great returns, by the way, but obviously it doesn't fit into our criteria. So from my perspective, proper investment should all be accountable. It should all be measurable. It should also be very much, done by folks that are informed, right? Anyhow, so moving on to a few of the other questions. How do you balance profits with making impact? Interesting. It's kind of like asking, how do you balance breathing and talking at the same time? It's pretty difficult, but we managed to do that, no?
Yeah, I mean, we think about it slightly differently. So I don't think about it as a sort of balance where it's a set of scales. What we do is we look for startups where both are there. So it's a Venn diagram, if you like. There's startups that make a huge profit and there's startups that make an impact. We look for the overlap of those two things, and we don't invest in things that are pure impact but no profit, or pure profit but no impact. So for us, it's finding the startups that do both. That's what we're looking for.
That's actually quite interesting to hear, because from my experience, okay, for everyone's information, I'm not going to divulge names, but we've raised money twice. The first time we raised money, we were so hungry for cash. We were going to get money from anyone. They're like angel investors are just going to support us. But we didn't really do our due diligence. Like, what are they here for, right? So we ended up getting money from someone who was there for profits. And then eventually, after a few months, they were nagging us for, hey, where's the return? And let's just say it didn't turn out very well. And then we had to raise another amount of funding. And I would say it's the total opposite, not really total opposite, but it's more balancing the previous fundraising, where now we were funded by an entity that actually wants to partner us for the same intention that we are here for in the first place, which is to create an impact, which is to partner towards reaching the same goal, which is financial inclusivity. And that's, I guess, that works. Sometimes personally, I feel like impact should come first and then profit should come later. Maybe we're going to experience problems later on, but I hope not. But yeah.
Did the investor make a profit on you guys? The short-term guy?
The short-term guy, no, but definitely in the long term.
So there we see, short-term guy didn't make money.
Yeah, I just want to build on that. There is on this question about balancing. I mean, it's actually possible to have two thoughts in the mind at the same time. So we believe that these things, profit and doing good, is a strong correlation. And it's not only me believing it. There's so many proof points, so much statistics on this now. You could pick up the recent version of Fortune. It's a big article in Fortune about this, and it's no trade-off. So just forget about the trade-off part. This is the way to make the most money of all kind of investment you could do. And there is also a question about exploiting this system. I mean, please exploit us and try to challenge the system. The more people that come in there, I mean, we are professional investors and we invest in great companies that scale. And it's not like profit first or impact first. Those two comes together.
So on the question of exploiting, I think it links to intentionality and also success, right? Do you think that in what we all do to actually provide support, right, in terms of experience, network, funding, and expertise, are we aiming at pushing a trend that is already mainstream?
I don't think it's mainstream yet.
The numbers seem to be pretty mainstream nowadays.
Yeah, I think it's mainstream. Well, maybe not quite mainstream, but particularly in things like public equities. But in private equity and venture capital, I still think this is it's not something that everybody has heard of. It's certainly not something that everybody has the tools to do yet. But they're coming under pressure from their investors, which is why I think it's going to be hard to exploit as a system, because there's a lot of alignment going on through the system, and I think if you try to exploit that, you're going to be rejected by the system now. So we're not quite there yet, but that's the direction I think we're going in.
I'm really happy to hear that, because that's the professional investors' value add, right? Which is creating a safeguard for folks that need money and folks that deploy money. And I'm going to throw shade big time on some of the unregulated, unlicensed fundraising activities may or may not involve cryptocurrencies that does not have this system, right? So in terms of exploitation, to answer that question, I think if you don't have a system to safeguard the people's money, then the retail investors are going to essentially be hit the most, where they actually can't afford the loss, right? So, alrighty, so I'm going to pass around the mic, because the last question I had actually doesn't tie into any of these kind of things, which is what each of us has done in our day-to-day jobs to actually improve the ecosystem, which is kind of advertising hour right now. So there's a choice. Do you want to talk about what you do, or do you want to answer questions?
Yeah, maybe I could. There is a question also, the most interesting projects you have invested in. So we have several funds. One of them is an accelerator fund called Katapult Accelerator. So we scout the world for the best exponential tech and impact companies. And we had about 1,500 companies we looked at the previous batch. And one of my favorites is a company coming out of Harvard. There's a professor called Alan. He's using quantum computing software to kill the Zika virus. And I mean, the Zika virus is a really terrible thing. We need to wash that out of the planet. So we're working hard to kill the virus now through very, very advanced machine learning and quantum computing software. So that's a really kick-ass company.
Yeah, I mean, we've made over 100 investments now in London, so there's quite a lot. One is a company called Fairphone, who produce a more ethical smartphone handset. So all of the smartphones that you're all like having a look at the moment, they all probably contain conflict minerals from Central Africa. It's very difficult to recycle them. It's difficult to understand what energy has gone into them. Fairphone have created a complete open supply chain around their phone. And they sold 150,000 phones in Europe now, and just starting to really scale up and hoping to launch in America early next year as well. So that's a good one for us.
I'd share about what our company does. In Vesl, we offer trade credit insurance on a per invoice basis. So trade credit insurance is the protection that you get if you want to protect yourself from a buyer who's defaulting. And traditionally, insurers offer this on a whole turnover basis with a minimum premium of $20,000. So SMEs can't really afford this. So what we do is we have a platform that makes SMEs protect on their invoices on a per invoice basis. So they just can cover as little as $10,000 invoice and pay as little as $100, which is very helpful because there are a lot of SMEs who are trying to expand their operations or to expand their sales all over the world, and they can't do so if they don't feel safe or protected. So that's what we do. We do trade credit insurance on a per invoice basis. But we're not an insurance company. We're the platform.
I think you do a great impact. It's a great company. So let us know when the next round is up. We'll have people looking at it. It's cool. But I think I just need to repeat my message because there are questions here about low profitability, KPIs, etc. I mean, it's super important to understand that we look for KPIs on the financial side, but also the impact side. And there's no trade-off. It's the opposite. It's a strong correlation between profit and doing good. And it means that, of course, we follow traditional KPIs, but we also include KPIs based on the UN Sustainable Development Goal platform. There are 17 goals, so we link you to what goals they could actually support and work on. It's a little bit difficult because it's 17 goals. They are interlinked, all of them, and one company could work on different goals. And we don't want to kill the founders with a KPI structure which is too horrible. So we do it on a light touch.
I wanted to add to your point, right? I think this whole concept of you have to choose between profitability and sustainability is almost like a confusion. Investors are not donating money to have no return. They are investing for sustainable return. Sustainable not being feel good, but actually looks good. What's sustainable? Meaning no loss or less loss. So when folks talk about a lot of the impact investment targets, a lot of times it's not about chasing short-term return. It's about capital preservation, not losing money. You can make a lot of money in your first year, and you can lose double down, right? That's public equity. Private equity is even worse. Meanwhile, sustainable projects that has a lot of access to raw resources, developing economies where you have the demographics that are growing, unlike essentially the demographics of a lot of developed economies where essentially the trajectory growth is capped, right? Those kind of things means that you have a business case and also you put the right kind of insurance policies and also the adoption that's guaranteed in very much a closed environment. You have a very good business case. And the returns are justifiable quantitatively just by looking at the returns alone without considering what exactly is being done. So I think the misconception about we're just doing good because we're avoiding doing bad, that is not impact investing. That is just, I suppose ESG loosely bracketed, and that's a concept that has been going around since the 1990s, right? Meanwhile, we're in essentially 30 years later, looking at something, almost 30 years later, looking at running towards a risk and making it essentially more scalable and essentially something that are more transparent and also accountable across all institutional channels.
Yeah, I completely agree. And if you want a resilient, scalable business, you need to make profit. And in a long-term perspective, of course, your runway is different depending on what kind of business you do. If it's doing R&D, it takes longer time. But anyhow, you need to make profit in order to scale it globally.
Shall I just tackle the how exactly do you determine intentionality in founders? I mean, to be honest, we invest at such an early stage at BGV that it's pretty much all we focus on when we're deciding how to invest or who to invest in. One of the things that we really look for is some experience of the problem that they're trying to solve. That could be direct experience, them as founders, they know the problem. Or it could be that they're just really able to tell us something we don't know about a particular social or environmental problem. So something that surprises us, some insight that tells us that they really understand that. And that you can really judge intentionality, I think, from somebody's understanding of a problem. So that's really what we look for.
Yeah, no, I completely agree. I mean, doing due diligence at that early stage with no traction, I mean, no MVP, nothing. It's of course it's about working with the people and interview them, talk to them. And I mean, how many did you look at? I think you looked at thousands and thousands. Of course, you get some kind of insight over time in that.
That can't be done by machine learning, huh?
Not yet.
Not yet. So I think whenever a question that says, what does blah, blah, blah mean to you in 5 words or less, that means your time is up, shut up, wrap up. So we should do that. So can I start? So what does social impact mean for me? In what I do, I'm trying to reduce senseless debt. Senseless debt is really not adding to the ecosystem. So if you make use of something that you have value, and then you allow the value to be realized, and also pass around the ecosystem, that's a beneficial cycle. Senseless debt is about pledging things you don't have. It's also about paying too much more for risk management. So everything that in Aquifer, what we do is about reducing senseless debt.
Okay, good one. So we invest in companies that are doing something impactful for the society and the planet, while we seek outsized financial returns.
5 words.
That was 7.5.
I'm just going to use, well, actually, I can use 5 words. So solving big problems with tech.
Helping a lot of people.
Well done. I think our time is almost up, 30 seconds more. Last question, no more question. Happy to catch us down, for individual discussions. Thank you for your attention. We've acquired more than what we started with, so that's a win. Thank you for your participation.